The big story today, of course, is TCS, which reported numbers yesterday. Revenues are largely in line with expectations. Margins are up about 40 basis points, but the commentary for 2025 calendar and FY26 financial year sounding a lot more positive. I mean, this from the CEO himself. We spoke with him along with the CFO and the CHRO of the company. Reema and I sat down for that conversation. Listen in.
The BSNL order, as we called out, was running at its peak in Q2. It has remained at similar levels. It has not increased. The execution is going quite strong. 70% of the overall work in terms of installation and commissioning also has been completed. About 60,000 towers are running commercial traffic. So, as we had called out, we should expect it to, run over between Q4 and Q1 of FY26. Coming to from a margin perspective, we did have 40 basis point improvement in spite of furloughs and the Q3 seasonality, including, like you saw, the seasonality in India. In spite of that, we had operational efficiencies helping on the margin front, and primarily kick-started by productivity, utilization, and pyramid.
Krithi, was the impact of furloughs more than anticipated, and will furloughs extend into Q4?
Q3 furloughs more or less in line like last year, and there will be some extension, particularly in Australia, where furloughs tend to go up to the third week of January. But again, that's also overall furlough is similar to last year.
If furloughs were in line with expectations, your revenues ex of India, which maybe BSNL or other contract, has fallen quite significantly. Even BFSI is under pressure quarter on quarter. So what explains that?
See, furlough was on expectation, but we did have some one-off issues. Like last quarter also we had called about a couple of accounts. They are bottoming out. So there were some client-specific one-off issues that bottoming out in Q3. So that also had some role in that. But if you look at overall, I would say that it's more or less on this is what we are expecting for this quarter.
Can you talk to us about the one-off client-specific issues? Were they the same as what we saw in Q2, healthcare, or any new one?
Yeah, we talked about healthcare issue. Okay, that was supposed to continue and bottom out in this quarter. That's what has happened.
No fresh ones, no fresh project cancellation or culls.
No fresh ones.
Just to go back to that BSNL bit, Samir, it's about what 5% of your annualized kind of.
We don't call out client-specific ones, but
right. No, my only question is once that runs out, you'll have that sort of hole to fill in that sense.
Absolutely.
What will be the impact in beyond 26 once it starts? So you said 70% of the work is done, 30% is left. So
right.
go on.
The existing contract runs out. We have opportunities. It's a first of a kind which has been done, and there isn't many players who can execute indigenous network in India, and that should open up further opportunities on a like-to-like basis. And yes, absolutely, it needs a replacement, and it need not be on that. We have had in general good order wins in Q3. And yes, it's part and parcel of the overall thing.
BSNL revenues have peaked in Q3. Does it drop off from Q4?
It is likely to drop off. When it's 70%, it is likely.
Okay. And can you explain the margin improvement, what led to it despite no growth?
As I said, the furloughs were the headwinds. And from a tailwinds perspective, it was purely operational efficiency, led by productivity, better utilization, and also the right sizing on pyramid.
Okay, and so Q4 onwards, or in Q4 and beyond, can we expect margins to improve, Samir? Given the rupee depreciation, given the BSNL contract is waning now, is there a margin tailwind in Q4 and FY26?
As we always call out, we would want to inch up and we'll want to get closer to 26. Earlier than possible, and the ones which I talked about, the operational efficiency levers, do provide additional headwinds in the short term, and we will be banking on them here and beyond. I think I've always been calling out pricing. Product mix also is something which we could look at in a medium to long term.
So Q4 exit margins would be closer to 25?
We don't call it out. We'll like to
You
get
did
to
once.
closer
I
to
thought I
26.
tried.
26 to 28, I mean...
Is the guiding peak.
So that remains, right? There's no change.
Yes, 26 to 28 remains.
Right. In terms of deals, just to go back to that, what is driving it? Is it cost optimization? Is it what kind of work is leading up to this big number?
See, we have started seeing some amount of improvement in decision making around discretionary projects. So it's not purely cost optimization. One of the interesting areas we see is tech modernization is picking up, and in run up to leveraging AI, there is more work around data that's picking up. So data, cloud, tech modernization, three important levers, apart from cost optimization levers around operational model transformation.
And this is, of course, also when we should start talking about the new administration. And Milind, I'm coming to you. I think you'll have your hands full with at least some questions from us on H1B and whatnot. But just your sense, Mr. Krithivasan, has the momentum picked up in North America? Are you seeing visible signs? You said some improvement on the discretionary side.
I said one discretionary spend, we are seeing some improvement on discretionary spend. In fact, one interesting observation we had this quarter is deal cycle has shrunk by a few weeks, which is also important, which means that more decisions are being taken. So there are definitely good signs, positive signs for the future. As long as something unforeseen doesn't happen, we are quite positive.
And discretionary spending is picking up in which all verticals?
Definitely we see in banking and retail. And to some extent, see, one segment that we'll wait and watch would be life sciences and healthcare. Even telecom, as the interest rates go down, telecom also would start seeing some amount of discretionary spend.
So do you expect discretionary spending to be more broad-based Q4 onwards? Do you have that kind of visibility?
I would expect that.
Go beyond the FSI and
Absolutely, yeah.
This is positive. I mean, much more positive than when the last time we spoke. Would you agree? In terms of commentary and
we are actually from a CY 25 to 26 perspective, we are definitely more positive on CY 26 at this time.
Okay. On headcount, give us the highlights, and then we'll of course get into what can happen, what may happen, etc.
So you mean headcount in this quarter? Or?
This quarter.
Yeah, it has gone down. And like I say always, and I will repeat that there is no linear correlation between.
So 2 quarters it went up. And this quarter
and
gone down,
that is one of the reasons, right? We actually have been 11,000 plus net addition in the last 2 quarters. This year, because of this quarter, because of various aspects, and we make these calls not just for a quarter, but through the year in terms of how we want to add people every quarter. And that's how they ended up being for reasons of productivity, utilization, pyramid, like what Samir talked about. Eventually ended up being at a negative headcount. And
you maintained in the past that headcount addition is not really in a linear way correlated to revenue opportunity.
Yes, right.
You maintain that.
That's right.
I mean, actually, you're sounding more confident, but you're not.
That's right.
I mean, headcount has gone down.
I can basically say that we actually are on track to hire 40,000 trainees this year. All of that is a very positive trend, and I'm actually planning to do more than 40,000 next year.
And what led to the jump in attrition to 13%?
No, it is minor changes here and there with respect to that. I'm not much worried about that. It is there is no specific place where I can point a finger at, but this is something which is within our comfort band.
Quarter-on-quarter basis, it is actually very insignificant.
But is attrition on a rising trend?
No. I think overall, I actually see a reduction in attrition in the coming quarters. LTM numbers may show otherwise because of the way it is calculated, but otherwise quarterly attritions may come down coming forward.
Milind, what is your perspective on this entire H1B? I mean, last 10 days of December really exploded, at least on social media. Incoming President Trump was asked, he said, well, he's very supportive of that program. They need skilled sort of immigrants to come in. Very much needed. So that is there, but this is it's an issue which is likely to persist. Your thoughts?
there are many things we are dealing with. This is not the one which is the top of my mind right now, because of the reason that we have been, have a global operating model, global workforce. We have been hiring people across all locations.
What is your dependence on US visas? Is it very...
No, it is reduced over a period of time.
Our US visa dependence is not very significant. What you get about 3,000?
It is reduced significantly.
We about 3,000, 3,500 visas per year. So it's not a very significant number. We actually changed our model. Like we are more than 50% local workforce in US. So our dependence is...
We have seen this before. It's not the first time it's happening. So,
But it's happening in a much more kind of...
a lot more news, yes, absolutely. But I think our model is very robust in terms of dealing with this.
What about tariffs? I mean, on services, for example, is it possible? And is there... Are you guys thinking about it? I mean, Krithivasan, if you want to take it?
It's a wait and watch. Too early to call out, and we'll be prepared for it. It would be an industry-wide thing.
It'll obviously, if it happens, it'll also affect, global GCCs here in India, which is servicing the US market, right?
Yes.
Yeah.
See, anyway, we cannot plan for it. We can look at multiple scenarios, but we have to readjust and recalibrate as and when something happens.
How's the pipeline, Krithi? After the strong deal wins that you've seen?
Pipeline's still quite good. But as I said, particularly North America is very good. It's actually increasing pipeline despite the strong deal wins. And across almost all industry verticals, we find the pipeline to be also strong.
So pretty much at similar levels to Q2, the pipeline, or has it expanded?
See, because there is a much higher TCV win, there is a marginal dip at the overall level, but a key market level we are good.
And the AI and GenAI pipeline, which was at $1.5 billion, I think.
It's continuing to be very strong. Like we stopped publishing those numbers because it's becoming more and more commonplace. Like there are so many AI projects happening. So the focus now is to improve the level. Like previously we did a lot of smaller and simpler projects. More projects are going into production now. We are looking into more complex projects. So the numbers don't matter too much anymore.
Three sectors which you've spoken about in the past, which are looking a little challenging: manufacturing, telecom, life sciences. I think life sciences, you said you're hopeful of maybe a turn.
Life sciences is subject to the US policy decisions around insurance and healthcare and all. So that's we are more on a wait and watch mode on what happens. Telecom, I am more positive because as the interest rates go down, that's a very capex heavy industry. So as the interest rate goes down, more discretionary spend should happen. So what is the third industry?
Manufacturing.
See, manufacturing, from whatever I'm hearing, from next fiscal year, things should look good. Okay. We don't make a Q4, like I don't want to comment on immediate quarter, but there also you see like traditional auto, their sales are picking up. So industry is in some sort of a flux, but we believe from our Q1 onwards, things should improve for manufacturing.
It's looking, for the US at least, the slogan is America first.
Yeah.
For IT services companies, that is still the biggest market. For you, it is a very, very important market as well. So, they're trying to juice up growth in the US, which should benefit. But on interest rates, for example, I've heard you say last 2 quarters, that's also an important macro variable, right? Now, one is not very sure whether those interest rate cuts will happen because growth is expected to be strong. But at the margin, it makes you more positive, all of this?
Overall, we are, as I said, quite positive.
Quite positive.
And UK and Europe?
See, from a market side, they are also expected, their GDP is expected to improve, not significantly, but GDP is expected to improve. And particularly in UK, what I'm hearing is government spending may go up, which can boost the overall spend in the economy. And Europe also, consumer confidence is better. So overall, as I said, our current sentiment is more positive on CY25.
So do you think FY26 will be better than FY25?
It should be.
It should be. And client budgets have closed?
I won't say it's closed, but based on the initial conversation with our teams, at least the budgets have a positive upward bias.